Connected is the new normal, and that has never been more important to the tax department than it is today. Digital disruption brings global connectedness, linking customers and clients, enterprises with tax authorities, tax functions with enterprise stakeholders, thus shaping new working relationships, business, and operating models, which altogether is driving the move towards a hyper connected global economy. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dialani. Now, ready or not, the tax function is rapidly becoming digital as well. Your organization must adapt to keep pace with disruptive technologies, increasing digital and regulatory standards, and mandates for reporting and exchanging financial information. Let's welcome Anil Paranjape, General Manager, India Operations Avalara, for today's episode to discuss how digitization has changed the workings around the tax departments and tax functioning and what does the future look like. Hi Anil, how are you doing?
Hi, Priya. I'm good. Really happy to be here. Thank you for having me on this podcast. It's an amazing podcast.
Likewise, Anil, it's a pleasure to have you on a podcast today. And, we really appreciate your insights. And I'm sure our listeners would definitely gain a lot of insights and new information after listening to this episode. So, kickstarting, with Avalara, I think Avalara has been at the forefront of automating tax compliance for businesses across industries. So, could you share an overview of Avalara's core offerings and how the company is driving innovation in the compliance automation space, especially in India?
Yeah, so happy to do that. We are, more than 20-year-old company. And as far as, automation and tax compliance, your question, right? That's our, reason to exist. From our inception, we were the only company at that time in 2004, which was built from ground up for cloud, right? So we were doing things in cloud on financial side, tax compliance side before pretty much anybody else when cloud was such a novelty. So automation, always on automation, accurate, real time, the most timely automation, that's something that is built into our DNA, right? And obviously, the whole technology stack has been changing all this time. Newer and newer technologies come in, not just in terms of what we develop, but also in terms of all the softwares that companies use, ERP systems and billing systems, point of sales, other automation systems that we need to accounting systems, etc., right? Yeah, that we need to interface with because tax is kind of embedded in somewhere in all these transactions. And so we have, since our inception, not just built our stack, but most importantly, we have realized that we must be well integrated with the entire software suite from procurement all the way through payments through then sales process from quoting all the way to cash. All of that, tax is important, compliance is important, and our entire suite is based on making tax compliance, especially indirect tax compliance, started with accurate, on time, reliable, efficient, always kind of contemporary, or always sort of compliant with changing mandates and changing rules and regulations. And now with AI, we are going more towards making it almost invisible, right? So I think the core offering can probably be best described. I'll try to be as brief as possible because it's we have very broad suite of tools and services that we offer to the market. But I think it's best described by, assuming, for example, or imagining a manufacturer. And so when you're a manufacturer, you start your business, you need to get various licenses, you need to register yourself with various taxing and other government authorities. We take care of that. Then you start buying your raw material, either to set up your factory or to start your production. When you buy stuff from your vendors, you need to deal with electronic invoices, You need to deal with various tax scenarios. Your raw material is you are the consumer, but it is not the final product. So in US tax system, for example, you are exempt from paying taxes on that. So there are things like exemption certificates. You need to actually prove to the vendor that they should not be charging tax to you. Now that is a significant complexity in the tax system. So we manage all that seamlessly for the manufacturer. And then you start producing, and you have inventory, you have assets, there are property taxes. I mean, in India, we think of property tax mostly as, real estate taxes. But in the US, for example, property taxes are much more complex than that. Your computer, your tables, your furniture, all of that is property, and that is taxed differently. So you have to deal with that. We have a very strong property tax compliance portfolio. And then you finish your goods, you start selling. That's when you need to actually quote, you need to accurately calculate taxes at the point of sale in real time. And then, it's time to actually ship the product. At that time, you need the right HS classification. So we do that tax calculation, and then entire gamut of things associated with that, such as, again, exemption certificate management. We offer world-class products and services on all of that. And then the HS code, as I said. And after all this, then you need to deal with tax returns to various taxing authorities wherever your operations are. So we take care of that also. And we keep all of this kind of up to date for you, for the manufacturer, and this all happens in real time. This is all integrated with, pretty much any sort of other softwares that you use, whether it's ERP or point of sale, billing software, other accounting systems, etc. And it's all real time, which means it is always updated with the changes in regulations and rules, which are just rampant in indirect tax compared to the direct tax. And it's on a robust and supremely efficient platform, where we handle millions of transactions a day in real-time tax calculation. So that's kind of your journey from setting up your company all the way to selling, and then compliance, returns preparation, and remitting the money. At every step here, whenever there is a transaction, wherever there is a transaction, it has something to do with tax, or there's a government angle, or there is e-invoicing, there is property tax. So all sorts of indirect tax compliance is what we deal with. There are few direct tax compliances that also we take care of. For example, in the US, you have hired contractors and you need to pay them, and then you need to issue various certificates such as 1099 tax forms that the contractors need for their tax returns. So we take care of all of that. So that's our core offering, essentially from inception of your business, setting it up all the way to the final tax returns, preparation, filing, and payment. And this all happens on a very robust world-class platform.
Great, that's truly insightful, Anil, and it's pretty much interesting and fascinating to see how Avalara is simplifying such a complex and dynamic space, like tax compliance through automation and technology. And I
Mhm.
think the way your solutions or the suite of solutions adapt to different frameworks and support businesses at scale really highlights the power of innovation in this particular domain. Building on that, I would love to dive deeper into how these advancements are translating into real impact. Up until now, tax departments have been somewhat reactive with respect to technology advances. But as new reporting and regulatory tax paradigms take shape, the roles of data and technology in the tax compliance function need to evolve to keep pace. Eventually, I think employers are also realizing that their tax compliance teams need to quickly get up to speed and incorporate more data and tech skills. And if we talk about the legacy tax management systems, they use spreadsheets, and the data was moved manually. So this makes the process prone to human errors and compliance risks. So, of course, when we talk about tax, it is often associated as a very complex and a compliance driven department. So, how do you think technology, if you're talking about AI or automation, even blockchain, how are these emerging technologies you think are changing the way organizations are approaching tax management today?
That's a great question. Most importantly, that's the question that sort of shows why your podcast is the way it is powerful, right? Because when you articulated that journey from tax compliance used to be reactive and spreadsheet based, and now it is going more proactive, less reactive, much more real time, much more automated. You essentially, better than me, just kind of just explain that shift already, right? So I don't know how you do that, that kind of homework for so many different topics. But thanks for doing that job, my job a little bit easier. But that's exactly how it is.
Right.
It has been reactive, it has been spreadsheet based, etc., etc. The way it's changing is there's one step which is from reactive to sort of always on. It's like real time, right? So what it means is if you take e-invoicing for example, previously I think people used to type up an invoice or maybe take and print out and then mail it. Then we started emailing it, but it is still after the fact, it is still a reactive step. And then after all that, then you close your books, let's say end of the month, and then you get collect all your data, which used to be in various spreadsheets or whatnot, and then you prepare the tax returns and file. Then with technologies like ours, that entire automation stack, right? You have the data at your fingertips, all your transactions and details about those transactions, including the buyers and the sellers and their addresses and what was sold and so on and so forth. So all that is captured now. Now that helps you sort of prepare and file the taxes pretty much lights out. Means end of the period, you can actually get ready with your compliance obligation. But that was just still not enough. With e-invoicing and the way which India really, really pushed e-invoicing, that was amazing because what it means is now it becomes proactive. It's not just reactive. It's not just lights out means at the end of the tax period, but the before the invoice is actually sent, you have started your compliance journey already because the government now knows what the invoice is, right? And so you can actually do live compliance, always on compliance with something like e-invoicing. In fact, India went much beyond that with all the other infrastructure. It was really breathtaking how India spearheaded that. But with that, that is the kind of proactive, real time, always on kind of compliance. Plain vanilla automation, the way, most of us are used to or have been used to, I think was good enough to take us all the way up to there, right? We have brought so many of our customers to that point with e-invoicing and with our super integrations with all the other systems, etc., where so many of our customers do e-invoicing across borders, so on and so forth. All the data is captured, and that journey from reactive to proactive has already happened for many of our customers, and many other customers and companies are catching up. What AI brings more than anything is actually going beyond that proactive, because now we can do much more predictive, right? Not just predictive, but we can actually push compliance all the way back into the process beyond what we kind of imagine as to where compliance sits, right? So, for example, you get let's say, an invoice, In fact, at Avalara also, when we actually buy something, then from vendors, the invoices come. Many of our vendors send them over emails and things like that. Now, typically after that email comes, then somebody in the procurement department, they're gonna collect all that and then process it. There are automated tools to process it and then put it into your financial system, your ERP system, all that data, right? But that happens today with a human intervention, or maybe there are some connect. But now with AI, what is going to happen is that these AI agents, agentic AI mostly, and we are actually rolling out these kinds of capabilities extremely, extremely rapidly. That these agents, imagine agents sitting in multiple tools without before it actually hits the ERP. So you get the invoice from your vendors, the tax calculation, checking whether you have been charged the correct tax, whether your exemption certificates have been applied, etc. All that can be checked right there in your Outlook, for example. So it is not just proactive, it is almost invisible because it is happening in the background and it is happening completely through AI without much human intervention. And the humans are called only when AI cannot deal with it because it's more complex, or they are called, more to handle exceptions, things like that. That is where it is going. It is already there, right? So I just gave you a small example of how AI in this particular case is really, really changing this entire compliance space from not just reactive to proactive, but from proactive to predictive now, right? And predictive is even more important. It is somewhat that, for example, how predictive will work is there's this concept of nexus in the US based on how much you are selling, to whom you are selling, which states, etc., how many transactions, the dollar value of sales. Then you will actually cross or breach a nexus threshold, which means, from then onwards, you need to actually start being officially compliant. You need to have registered, you need to start charging taxes, you need so on and so forth. And that is something that is hard to predict when you are going to reach that state. So with AI, I think looking at all the patterns in your entire set of tools and your data, you can actually start predicting when you are going to breach Nexus. Today, we give that kind of service to many of our customers, but you don't have to actually come to you. Our tools could be sitting in your systems before ERP, where that transaction kind of first starts taking shape or starts germinating. Right there, things can be caught, things can be looked at, things can be examined, things can be predictively analyzed, so on and so forth, right? So AI, more than anything else, more than regular automation, is really the linchpin. It's really the hinge factor that is going to take us on that journey from reactive to proactive. As I said, plain vanilla automation, from proactive to now predictive, all the way back into the system wherever the transaction is starting to germinate, right there. So that is really what AI is doing. That's a big promise, and we are seeing a whole lot of evidence of that happening. We are certainly on the forefront. We have made a whole bunch of announcements as to how our AI driven compliance is going to look like. It is already getting there.
Definitely, that was a really fascinating perspective that you shared, Anil. And I very much like your point that we have seen the tax function evolved from being reactive to proactive, and now we are in an era where it is going to be predictive. And it makes it clear that technology, whether it's AI or any sort of technology, is no longer just simplifying compliance, but it is actually transforming tax into a very strategic function.
Yeah, I mean, and don't get me wrong. It's not that AI wasn't there. So, one transformation or steps in this transformation is from this reactive to proactive to predictive. But the other way you can look at it is also sort of something, and you said it yourself, right? It was spreadsheet based,
Mm-hmm.
which also means many times it's static in the sense, the rate tables, for example, tax calculation, right? The rate tables are kind of baked into something, maybe embedded in the spreadsheet or static knowledge in your ERP systems, right? Many times ERP systems do that. Tally does it, for example, in India, GST calculation, etc. But it's not updated. And AI actually has already helped in so many ways, helped us to make it really, really dynamic and really, really up to date. I'll just give you an example. And these are mind boggling numbers, right? The numbers are so, for example, in a year, entire world, right, the 180 or 200 different countries that have some kind of indirect tax, the number of changes in the tax rates and rules and regulations and court rulings that clarified something, and therefore now there is people can just go on with the right tax calculation. These run into literally tens of thousands every year, right? So if you think about it, if you are a global business, then you sleep tonight and you wake up tomorrow morning, in those 12 or 8 hours of whatever you're sleeping, or maybe very little if you're really, really working hard, there could be 100 changes that have happened, and your system is already 100 changes old, right? And as a result, you are going to be non-compliant. Now, how we have been dealing with this kind of insane amount of change worldwide, and we do this for so many hundreds of countries, right, is through AI. So, AI actually has been historically going through, so many thousands of websites for us, scraping all the changes. And then there is a human in the loop, which kind of says, okay, these are the changes, these are important, these are happening 2 weeks from now, these are going to be, rolled out on November 1st. And so our systems, which are all cloud based, obviously, so they become up to date before you even know that a change has happened, right? So for you, the customer, this change has been sort of invisible, but your systems were already updated automatically and they were accurate, and as a result you were compliant. So we brought tremendous accuracy and this reliability and update to the system. So that is something that technology has already enabled. But it is still very visible to you, even though the change was invisible, all the tax, the compliance work, how the data flows, and you actually need to intervene and so on and so forth. So the world of tax, the compliance part is still visible to you. It's reliable, it's accurate, but it's visible. You need to intervene. You need to kind of make sure, you need to make decisions as to when to trigger what, and so on and so forth. Now with AI, from this reliable, it is going almost to the invisible state. Invisible means, things will keep happening. Various agentic AI tools or agents will be talking to each other while you are not watching. In the background, they will be making decisions. They will be taking care of compliance obligations. They will be putting the data in the right place. They will be brokering communication amongst different softwares that you use in your ERP, your billing, or whatever. And you will be notified only when there are exceptions or there are complexities, etc. So from non-reliable, error-prone to reliable, we have already done that with vanilla automation, some AI. But with agentic AI, now it will become invisible. So it's reactive to proactive to predictive, also from manual error prone to automated, reliable, accurate to now invisible, right? That's a tremendous transformation that only technology could do, especially in the face of these kinds of changes which run into 50, 60, 100,000 changes a year. Even in one country like US, where there are 15,000 or 12,000, whatever number of tax jurisdictions, the number of changes literally run into, tens of thousands every year.
Right, totally agree on that, Anil. And the next question that I am willing to ask is the other side of what we have discussed. I mean, while we are evaluating the opportunities that come up when we are trying to automate the tax compliance, we also need to weigh the risks as well. I mean, the challenges should definitely be considered as a part of the journey to transform the tax department with technology. And I think organizations need to do an assessment of the current practices and look strategically at implementing these advancements that will help them unlock the operational efficiency of their internal tax department operating model. And of course, I think adoption of any technology, and right now while we're discussing about tax technology, it isn't always smooth. So what are certain, I mean, biggest challenges Indian organizations specifically face in terms of implementing these new solutions, and how do you think they should, the teams out there, the tax leaders or CFOs should prepare themselves to tackle the challenges and as well as embrace these changes effectively?
Well, that's a great question. And I want to qualify my answer to begin with, because what we offer at Avalara is, global indirect tax automation and compliance. But our focus is essentially so far on the US compliance, entire US, and then Europe, EMEA. So essentially US sales tax and VAT. In India, we do not offer the local GST compliance solutions. We offer very partial, part of it for our global customers when they have certain needs in India. But what we offer, which is a tremendous value for Indian customers, is essentially for Indian exporters. Whenever you cross the border, Indian border, for business, then we are your solution for all sorts of compliances on indirect tax, right? So that's what we offer. So when I say what people should be aware of or what they should weigh and they should think about, the CFOs and the tax managers, etc., please understand that I'm talking more to the Indian exporters who have global tax compliance obligations now because they're selling globally, right? Some of what I want to say will still be applicable even for local compliance, but because these are just some of the right things, these are some of just the hygiene kind of things when it comes to any kind of compliance, right? So one important thing from global tax compliance viewpoint is there is a tremendous amount of misunderstanding in India, and it's not just in India. We see this globally actually because this whole area is so dynamic, and as I said, the changes happen so frequently that nobody is able to even keep up with these kinds of changes. Forget businesses and CFOs, even advisors who are supposed to be knowledgeable about this are simply not able to keep up with the changes. So there is tremendous amount of misunderstanding slash ignorance about what is really the compliance requirement. We actually, I would go beyond that and say that, in many cases, people don't even know that there is a compliance requirement. Forget, whether they have the right idea of what compliance means, right, in especially in cross border compliances. So very first thing is, I think people need to understand that the compliance requirements are not just there, but they are becoming more and more onerous. Countries and jurisdictions worldwide are trying to find tax money wherever they can. And as a result, it's not limited to just, physical presence of buyers and sellers in the same locality or in the same jurisdiction. It's like anywhere in the world, any seller in the world is liable to charge and collect taxes on behalf of the US state governments if they are selling to people in the US. So that kind of, tremendous compliance reach, it's something that first and foremost people need to understand. Once they understand that, then I think the next is, how bad is that or how complex it is. And in India, we love to talk about, oh, GST, there is so much complexity, et cetera, et cetera. The complexity in cross-border tax compliance is like, I would say, like 100-fold or even more, right? GST feels like a cakewalk, India GST, compared to what you need to deal with in many other jurisdictions. So that complexity, once you know, then you need to look at the technology to deal with it, because you'll immediately come to realization that this is simply not doable manually or through spreadsheets or anything. Not just because it is complex, but because the jurisdictions are wielding technology in really, really tremendous and novel ways, right? So if the jurisdictions are looking at AI, they are harnessing AI, they are harnessing, all sorts of data science and analytics to find patterns, to find potential non-compliance, etc., and they're starting to crack the whip, then you must, as a business, need to wield at least as sophisticated or probably hopefully even more sophisticated, just to make sure you are compliant and you don't fall into the non-compliance, I won't say trap, but non-compliance situation, right? So that is the second thing, that jurisdictions are becoming much more vigilant. And the same technology that is helping all of us businesses become more efficient, it's helping the jurisdictions also become much more efficient in what they do, which is essentially look for compliance or ensure compliance by everybody. So that is that. Beyond that, I think the third thing is what is emerging, right? So I think, once you do the first two things, then you realize that, hey, it's actually much better to invest wisely and be compliant. The cost of compliance is much, much less compared to the cost of non-compliance, because the jurisdictions are cracking the whip. And once they crack the whip, we are seeing many of our new customers who come to us after they get notices from US tax jurisdictions, state tax jurisdictions for millions of dollars, right? These people have been kind of, doing business in the US without worrying about compliance for years. And then finally, they have to pay. And that's when they come and start becoming compliant, which is a good thing. But it is actually not just a tax, a growth tax, in the sense, when you want to grow and you want to start selling all over the world, and, you have to pay a price in order to be compliant, in order to enable that growth. I think being compliant is actually a growth driver. It should be, we should look at it the other way around. I'll give you examples, right? So we know of a company that has, hundreds of millions of dollars of revenue, essentially doing checks on invoices that big businesses get from all their, hundreds of thousands of vendors. There may be invoices will be in millions. And these guys kind of check these invoices and make sure that the invoices are right, the tax is correctly calculated, etc., etc. Now, if your customers are using these kinds of companies or they are doing this by themselves, if your tax charging, if whatever your invoices are not right, they are not accurate, the right tax is not calculated, or the vendor or the customer has exemption for certain tax types and you have ignored that, then is your customer going to be happy with you? Right? They would rather choose a vendor who understands compliance and therefore their invoices are correct by construction, as opposed to a vendor that creates or that has so many mistakes in their invoice, because nobody wants to deal with such kind of vendors. So if you want to actually become a vendor of choice and trust for customers who want to be compliant and put a premium on being compliant, then you have to be compliant. And that becomes a tremendous strategic and competitive advantage. That's why I think that being compliant is not just a risk reduction or risk mitigation strategy, it is actually a growth strategy, because the the faster and more accurate that you are and more compliant that you become a vendor of choice that much more easily. Because everybody is looking for reducing risks in not just in their operations, but in their overall compliance, because the cost of non-compliance is going up for everybody. So I think those are the three things, just to recap, being aware that compliance burdens are there cross-border, it's even more so. Inside the country, still the same. Understanding what those burdens are and what those requirements are, looking at the right technologies, how well integrated it is with all your operations so that your workflows are not completely changed, because that's a really painful thing. Choose the right platforms, right technologies. And the last one is to realize, most importantly, I would say, that it can be significant competitive advantage to be compliant in this changing world now.
Right, definitely. And I think in the digital era, technology has definitely played a vital role in streamlining different functions in an organization, including taxation now, because overall taxation is a complex function because it involves an interplay of various factors. And it is impacted not only by the internal functioning of the organization, but also by the external changes in tax laws and updates. We spoke about manual systems, they were tedious and prone to errors. But with technological intervention like AI, and we are progressing with different advancements, we have agentic AI, generative AI. So they are all meant to, speed up the process, make it more accurate and reliable. And I think overall technology can make the taxation function very much agile for an organization to survive in an extremely fast-paced world that we are moving in. Well, thank you so much, Anil, for taking all the time and effort to be on a podcast today, and helping us understand that enabling businesses to sense, learn, respond, and also evolve will be very imperative for businesses going ahead, and especially with taxation. And those that begin their transformation journey now will be better positioned to anticipate and navigate further change in the years ahead. So, thank you so much. It was lovely chatting with you.
Great. Thank you, Priya. Thank you very much. And thanks for summarizing all of this so succinctly in just 1 minute. I don't know why I was talking for this long when you can summarize it within 1 minute, all of that. Really great. It is an honor to be here. And thank you very much for having me.
Thank you. Thank you so much, Anil. So, this is for our listeners. I hope you enjoyed today's episode and learned more about how tax function is evolving and the role of technology here. Of course, please do share within your network and let us know what is something else you would want us to talk on in our next episode of the podcast. You can view all our previous episodes on Spotify and other leading platforms. Thank you so much.